Afternoon. Sorry, I'm late. And I've got a frog in my throat. Sorry, I was in the middle of coding something and I suddenly looked at the clock and I was like, it's 31 minutes past. So, yeah, sorry about that. I'm back. And I haven't got my glasses on. For those of you that were in the member stream this morning, you now know I've got these. Good day. Right. So, let me just get the chat up as well because I haven't got the chat ready. Really, really organised today. It's been one of those days. I've been in coding mode literally all morning. So I end up just like with a fried brain. Anyway, morning, Mark. Afternoon, even. Paul, Soul Trader, Joe, Rody, Marco, Joe. Lights are on, but nobody in. Exactly. That's about me. Craig, Soul Trader, might ask for a refund on the free stream. Yep, no problem. Afternoon, Monkey, Virginia, Rajiv. How are we doing? Right, let's have a look at what's going on. Posted this morning, Swiss yen I got out of today. Pen's not up. Where's the pen gone? It appears somewhere on my screen. There it is, over there today. Swiss yen got out of that this morning. Actually, about an hour ago, not long ago. Not a very big profit, but that was a bounce off of that short that I took last week into propulsion. We came down and hit this low. So I got in on the RSI extension and back up into propulsion. So that's the target. I was looking for a bounce out of this propulsion gap at that area, which is exactly where it seems to be bouncing. Whether it does or not, we'll have to wait and see. But yeah, out of that today, that's all I've closed. I've got Euro CAD on as well, which is starting to retrace a little bit. This is really stuck at the moment. So we covered this morning, it's FOMC today. So unlikely we're going to actually move anywhere today. This is pretty typical of FOMC day. We just sit around and do nothing because the market's not going to want to drive any large volume into anything until it knows what the Fed fund rate is going to be, because that's going to affect the dollar, which will affect obviously all the trades, forecasts, everything. So we're waiting for that to come up this evening. The press conference is where it really kicks off. So that's at 7:30. We tend to get movement around about 8:15 when the market's had the press conference. The questions have been answered and the idea of where we're going to go basically is in place. So that's really when we're going to find out where the move is going to be, if there is a move. So that's basically probably going to do that, I suspect. I doubt we'll get a lot of movement today because we're still on Trump time. We're waiting for him to decide what he's going to do with the next round of tariffs. And until that happens, not like that's going to happen, is it? So Bank of England rate is also tomorrow. We're dropping the interest rates in the UK to 4.25. So just a quick note on that FOMC rate. We very rarely get a deviation on that. We've had one September last year. That was it. Other than that, we get exactly what the Fed forecast. They're really good at giving us what they say they're going to give us. It's not necessarily the right thing to do, but that's what they do. The Bank of England also very, very good at giving us what is forecast. As you can see, we've had one in September 23 and one back in June 22. Those are the only deviations we've had. Not expecting any deviations, but obviously with this tariff thing at the minute, very difficult to tell what anything's doing. So yeah, be aware of that this evening. And then tomorrow we've got the main interest rates coming out for the pound. That's the exposure I've got on at the moment. I took a US dollar yen long this morning. We had a reversal alert go in this morning, and I like this because we're putting in higher lows at the moment. Potentially for a push back up into new highs there. I'm kind of expecting some dollar strength from somewhere at some point, but if that doesn't pan out, I did this in the member stream this morning. That's second entry on a bounce down there, and fourth entry somewhere in that ADR, 1.25 ADR move to the downside into the monthly lows. But as you can see, structure's now looking like it wants to go long up into these propulsion gaps. So I'm playing that basically, but it's still a downtrend. So we're playing the pullback in the downtrend. I'm expecting it to get back up to here, but obviously we could come back up all the way up here. I doubt it, but you never know. So this morning, long one on the S&P, no trade on the Dow, no trade on the NAS. So this morning was dead. There were no trades with ORB this morning. The ranges were far too small today. There was absolutely tiny ranges. So we just sat around, did nothing. We had a little pop up, little pop down. We sat around. We finally tried to start breaking out about 2 hours into the session or so. Then we pulled back and it has actually dropped now. But that is because we've had some announcements of Euro tariff retaliation coming shortly. So if we look at quickly the news from the morning, that will make more sense. So EU Trade Chief, European Commission will announce on Thursday, tomorrow, preparatory steps for next countermeasures to US tariffs. So remember, the European Union has got this huge bomb of tariff retaliation that they have planned. They kept it very quiet when Trump decided to retrace the 90-day, put the 90-day freeze on, basically. But it looks like they're going to come out and combat it anyway. So tomorrow we could see the euro either go through the roof, go through the floor, or Trump come out and do something else to retaliate against these tariffs. So tomorrow could be a massive day for the euro and the US. But that's this morning, this afternoon. So obviously we've got now, as you can see on the DAX, an immediate drop in stocks. So that's the only move we've had, but that was obviously tariffs. And the FTSE, we've also had a decline. Again, FTSE range this morning, really, really quiet. The first 30 minutes, we couldn't get any movement at all. It tried to break out, pulled back, tried to break out, sat around. So it did very much the same as the DAX. So just no trades on that this morning. Okay. So S&P500, blimey, I've already triggered short. I didn't even see that. Look. Okay, so S&P, we are whipsaw mode at the moment. So that was the initial 5-minute range, which was just big enough, just over 20%. Am I running 20 or 15? Running 15 on the S&P, so that's 15% of ADR. So triggered short, immediately stopped out, now triggered long. So we'll see where we go. If we can get the long trigger, obviously that's just going to pay back that one. Let's just see if we've got any trades on the NAS. So no trades on the NAS. Range is too small. So 10-minute range, or rather 15-minute range, is going to be 66. So a little bit further. There we go. So we should get, not quite. It's not quite enough for a 15-minute range. We've got 14 seconds left. Not going to get a trade on the NASDAQ on the 15 either. Dow. Dow we're going to get a 15-minute on as well. So let's see how we go with the Dow. So there's the 15-minute range gone in on the Dow. NASDAQ, no trade. See if we can get 30 on that. There we go. So there's US. Morning, afternoon, even Chris. Afternoon, David. Different camera angle. You look smarter with the glasses. I do. I don't really need them, but now I'm wearing them. Everything's so big and clear. It's amazing. I've been wearing glasses for 20 odd years, but only for distance, for driving. And I had an eye test a week before last. And they said you would benefit from some intermediate glasses as well as driving glasses. And it's actually really good. They're very clear. So yeah, I've got 5 sets of glasses now. Anyway, thanks for the glass. Nice glasses. I'm glad everyone likes the glasses. I can't actually see myself because when I look over there, which is where the monitor is for my camera, I turn away from myself. I can't catch myself, so I can't see what they look like. Afternoon, Mimo. Afternoon, Peter. Right. So yeah, no trade on the NASDAQ. S&P, we are trying to break long. Let's have a look at where we're potentially going if we do get a break on the S&P. I'm a little bit worried about price action today. It's non-farm payroll, FOMC day. We tend to have, as you can see by Globex, we tend to have a rotation on FOMC. Market really doesn't want to drive too far. So we tend to get quite a rotational market. So I would be happy getting that initial loss back today and making a small profit ahead of FOMC. But we'll see where we go. So we're not trading NAS. Let's watch the Dow. No trade triggered on the Dow yet. Market is struggling a little bit today. We'll come back to that in a minute. Right. So ADRs today, there's quite a few ADRs. So the Swiss has moved quite substantially off the back. As you can see, all the ADRs today are Aussie dollar Swiss, Swiss yen, Euro odd, Euro pound, Euro New Zealand, pound odd, pound New Zealand, and New Zealand Swiss. So kind of tell from that what's been moving. We've had some Swiss franc movement, which has basically undone yesterday's move. So they've gone straight into propulsion, which could potentially sell back off again now. The Euro and the Swiss obviously moving there. The Euro moving a fair bit off the back of the news and stuff. So there's been a fair bit of movement today, but nothing particularly dramatic. We've just hit sort of normal ADRs. So Aussie Swiss, this one's an ADR hit basically off the back of the New Zealand news this morning. And now obviously the Swiss franc has powered up off the back of that news. So this is a big Swiss franc move basically off the back of the European announcement for rates coming in tomorrow. So Euro pairs obviously skyrocketing at the moment. These might give you mean reversion opportunities today. So Euro New Zealand, for example, we're above ADR. You've just had a reversal alert. So there's your potential short entry. But just bear in mind, if this doesn't move today and we just kind of sit around up here and it doesn't mean revert straight away. And if this is the market buying into the Euro retaliatory tariffs tomorrow, then it's thinking that they're going to buy the Euro tomorrow. So this could potentially be a continuation tomorrow and for the rest of the week. But obviously Trump will come out and try and combat it. But just bear in mind, if you do take a short on this and this is the start of a Euro rally, you're getting right in at the beginning of the rally. So just be a little cautious. We've got the FOMC this evening, which I don't think Powell's going to say anything, but Powell's under a lot of pressure to drop rates by Trump at the moment. So it could be that Powell suddenly decides this evening to do the rate drop, as Trump has said, because he wants it done and he thinks, right, well, let's just keep him quiet. That could really impact the Euro as well. And it could obviously go in either direction. So just bear in mind, we've got the tariff announcement tomorrow. We've got FOMC this evening. We've also got the pound rates, and the Euro and the pound move together. So if the pound interest rates come out unexpected tomorrow, the Euro is going to move on that as well. So everything you're seeing here is based off of news over the next 24 hours, 3 major news events. So just be a little careful with them today. You're going to see our RSI extensions on the hourly start to pop up shortly, with some of these Euro pairs as well. So there's going to be double confirmations to get into some of these, but just be a little cautious. Stopping out on everything today. This is going to be a whipsaw day, isn't it? So S&P, just Christmas trees, as I like to call it. Red, green, red, green, red, green. At the minute, no directional bias. So that's what I was worried about today. But sometimes it does, sometimes it doesn't. So we'll see where we go in this S&P. So the 30-minute ranges, 5, 10, 15, 20, 25, 30. So we've got one more candle to go, which means that if this does stop out, this S&P, we will get another crack long or short on the S&P on the 30-minute range. And obviously that will be with slightly increased risk. NASDAQ range is now good. Yeah, so there we go. So the 30-minute range is going to trigger on that one candlestick on the NASDAQ as well. Not on this candlestick, on the next one. So there is potential for some movement. We are just not getting anywhere at the open. It's all stalling out still. So those ADRs, Euro New Zealand, obviously is an ADR hit to the upside. Aussie dollar Swiss is an ADR hit as well. That's to the downside. So you've got potential long opportunity on that one. But as you can see, very range bound at the moment, very sort of grindy. So buying up lows is not a bad idea at ADR. But we don't know how strong this move is going to be with the euro, and therefore obviously the Swiss, because that moves with the euro. So that could well be sort of coming back down here tomorrow. You never know. So Aussie dollar Swiss. You've also got Swiss yen, which I've already got out of today, but there is the mean reversion opportunity there. You are almost getting a reversal alert on that. So kind of a really bad head and shoulders. But if that reversal alert kicks in, that could be obviously a nice drop on the Swissy. Euro odd also extended. Reversal alert just gone in on that one. We've just looked at that. Euro pound, same thing. Missed that one, so that one's already gone. So that was your ADR hit this morning. That's the average daily range. Reversal alert and a retest has gone in there. That was already played out, so you've missed it if you haven't got into it. Euro New Zealand also extended. M pattern reversal, just starting on that one. Potential second leg. So that's a good looking short. Pound odd. Again, Australia and New Zealand. So there's your pound odd. There's your reversal alert just gone in. Structure shifted to the downside. That's coming down quite hard now. Might have some movement. Yeah. Still Christmas trees though. So 1 minute 30 before the 30-minute range goes in. 5, 10, 15, 20, 25. No, it's not. Sorry. 6.5 minutes until the next range goes in. So not quite yet. So yeah, pound odd, pound New Zealand, pound odd, pound New Zealand, pretty much the same pair. Just take one or the other. They are correlated very heavily. So there's your entry on the pound New Zealand. Targets on that all the way down here. So roughly half an ADR. Again, all basing down here. Look, so that reversal alert on the hourly just gone in. But if it can crack above yesterday's high, that potentially is going to start that leg up into last week's high and potentially back up into propulsion. But obviously, it's all going to depend on what happens tomorrow with those interest rates for the pound. New Zealand dollar Swiss also extended. That one, again, you've missed, I think. Is that an ADR to the upside? No, it wasn't. So that is, right, okay. So there is your, so again, this is a tricky one. We are sideways, really not going very far, very fast. You've just had a reversal alert, which is a short entry signal, and you've got an ADR reversal. So potentially what could be happening here, obviously we've just broken out those highs, which has been rejected, pushing down. There's your reversal alert for a short entry. So push back up into propulsion and then break down. So that would be a good entry short up there in the propulsion gap, which means on 5 minute, you've just had the reversal alert. So you can trade it back up into the propulsion gap and then short it back out. Push up. That gives you your structure to the downside. There's no alert on RSI on anything though today. So nothing's, it's all very, we covered this in the member stream this morning. It's all very range bound at the moment. Everything is kind of stuck. So we've had the tariff announcements, all the chaos. The market is still just sitting around at the moment, just plodding, not really got any direction. And I don't think FOMC really is going to drive anything anywhere either. I think what we'll get with FOMC this evening is some decent whipsaws. But unless the Fed come out and say something particularly exciting, there's absolutely no reason why we should be going anywhere. So again, doesn't matter which way you trade it. If you get an RSI extension, yeah, you're not really going to get any. But yeah, just buying every low and selling every high if you can get to it, it's all going to work. As long as we're doing this, you're going to get easy ins and outs. You're just not going to make much money because we're moving literally. If you're lucky, we might get an ADR. So look at this Swiss yen. Both of these actually look. So that Swiss yen short that I took last week, that's one ADR. Took 3 days and then got in yesterday. That isn't even one ADR to the upside. So everything is just taking a while and not going very far at the moment. So short targets, quick in and outs, name of the game at the moment. Okay, so S&P's broken long. So where are we going? So I'm going to go for a partial at the highs. NASDAQ got 2.5 minutes, and then I'll be taking a 30-minute break on that. Dow still not triggered long yet. A hell of a candle. We've got earnings at the moment. What's the date? 7th of May. Fiverr, pre-market, Novo, Unity, Walt Disney was pre-market. So we've got AMC aftermarket, ARM, and Occidental. Who did we have yesterday? Nobody exciting. Shopify tomorrow. Cloudflare, Coinbase, Pinterest. So yeah, we've had all the big names last week. Nothing particularly exciting on the earnings. Bessa is testifying again. Probably won't say anything particularly exciting, anything more than yesterday anyway. Anybody got any other pairs they want to look at FX wise? I did cover everything in the member stream this morning from an FX perspective. So if there's anything you want to look at specifically, let me know. But there's no alerts to look at on RSI today. It's flat. And obviously the ADRs we've gone through, but they're all tricky ones today. So if you've got any pairs you want to look at specifically, let me know. But we're just waiting for this 5-minute candle to go in 20 seconds. And then we'll see if we can get a break long. But this is your 30-minute candlestick going in now. So it is bull. Both bull. All bull. There we go. So this is 6-bar range in. So NASDAQ will be taking a break of the 30-minute as well. All very, very similar, though, at the moment. Price action very, very similar across all of them. Such a heavily correlated market at the minute. Which obviously means that you are kind of increasing risk if you're trading all three indices because they're all doing the same thing pretty much. So, which is great. If they all break long and you get clean breaks, you make lots of money. If they all whipsaw all day long, you lose loads of money, basically. So keep the risk lower if possible at the minute. Or just be accepting that you are potentially going to lose more if it goes wrong. So upside target on the S&P, I'm going to leave at that high. Let's just quickly look at the NASDAQ. I'm just assuming we're going to get a break long on the NAS. I'm going to move that down as well. And the Dow. So upside target on the Dow is more tricky because if we do break long, we're going to be running straight into resistance. I'm kind of going to ignore this wick because this whacking great candle we had going in overnight here. I'm kind of going to ignore the wick of that price action there. That's really Globex high as I would see it here. which is that peak from yesterday. That's a little bit too tight, really, for taking initial profit. So there's actually not really any areas to the upside that are interesting apart from these highs here. So if we do break long, I mean, the chances of us getting a break up to there on FOMC day are very, very, very minimal. So that's 1R. That's pretty much 1R. In fact, it's slightly shy of 1R, but I think that's probably my realistic target for the Dow today. Market's really struggling to get anywhere. Right, nobody got any pairs to look at. Well, that's boring. I did cover oil this morning. I'm really tempted to do some oil at the moment. I was doing exactly what I said this morning. Haven't looked at it since. I should have taken it. So this weekly 2-week low, we slammed through that and then retested it multiple times, that propulsion gap there. And I said this morning, I'd be interested in a rejection out of that propulsion gap. And it did start to move, but I was kind of waiting to see if it happened. So one or two things is going to happen here. At the moment, the oil price is predicted to drop, and they're looking at somewhere around about potentially $50 a barrel. And if you go back out and look at last time we were down at the 50, I got it on the chart, look, $50 a barrel. There is COVID. Yeah. So pre-COVID, we did manage to just about get down there. But that is the level, or kind of the price in the sand, if you like, $50 a barrel, where the market finds it very hard to trade, because the cost of oil production and manufacture below $50 a barrel makes oil companies very little profit. So what they tend to do is they roll back production, which stockpiles then drop, which means that if demand stays the same, supply has dropped, cost goes up, which drives oil price back up from $50 a barrel back up to where they like to be, which is $60 to $70 plus. So at the minute, the forecast is to drop. And if market structure from this lovely Trump tariff move is going to continue, obviously this is where we were on our way to. We were on a trajectory down to sort of $55 a barrel before Trump did this. We hit 55 and immediately bounced off of it as soon as he announced that 90-day pause on tariffs. I think this is a lower high going in, and potentially we're going to continue to break that low, and we're going to go drop down to that $50 a barrel target at some point this year. So if that's the case, that's kind of where I was looking to short it from. So I'm tempted to take one. I wouldn't take it on this account because I wouldn't position trade it. But if you can get into a trade on this and hold it, I think you've got a good chance of making a lot of money on it. So it is coming off really nicely there. So that's the 50% retracement on that leg. Which basically is as good as place as any to go in and go for that low break there. So just an option for you if you want a long-term trade. But obviously, as you can see, you're not going to get there. You know, we're talking sometime in the next month or so, maybe. But obviously, Trump could destroy it immediately, couldn't he? So Aussie dollar CAD. Aussie dollar CAD. We're back up. So V-shaped recovery on the tariff move. That was our original range we were trading, which the market was quite happy to sit in. These are both commodity pairs, so both affected by commodity prices. Commodity prices have obviously been dropping, but Canadian oil, big production, big export oil, and obviously as oil prices coming down, you would expect Canadian dollars to drop. Obviously with the tariffs, everything's affected at the moment, isn't it? So let me just quickly see what's going on. Nothing. So no trades yet on the NASDAQ or the Dow. inside bars, look, are just ranging. So yeah, so Aussie dollar CAD, yeah, love that. If you get a reversal alert on this, you're just about to get an hourly reversal alert, potentially today in the next, sorry, this is a 4-hour reversal alert. So we got that high rejection, lovely big wick rejection there above those highs. So that is potentially your W pattern. We've tried to break out of the highs this week, failing, not getting very far. So if we break that low, you're coming down at least to test 225 ADR to the downside. But potentially you're looking at a continuation short. So testing that area. There's a lot of long-term trades on at the moment because the market has shifted direction massively over the last week. The last month, because of obviously what's gone on with these tariffs. So we've got a new world order of trade. We've now got India and Pakistan fighting. We've got Russia and Ukraine fighting. We've got Egypt and, Israel. Hopefully not Egypt as well. But, it's kicking off absolutely everywhere worldwide. So there's a new world order of trade. There's a new fight going on for dominance everywhere. It's really, really shaking the markets up. But because the US dollar is still the world's currency, there is still, I think, a little bit of faith in the dollar, but there is still that reticence for the market to actually make any seriously strong moves in either direction. So we are going to see a lot of this at the moment, but the direction that we've started here with Trump. So regardless of what instrument you look at, you can see the Trump move very clearly everywhere. Yeah. So depending on whether it is bullish for that currency or bearish for that currency or that pair, that cross, I think we're going to continue in those directions moving forward. So obviously, as you can see, it's going to take a while, but long-term bias, I think, is going to change. I think the Europeans and the UK, we're going to deal with China most of the time now. We're not going to deal with the US. There's no point. They're just destroying everything. Canada is making lots of deals with China. Everybody's making deals with China. So it makes sense that the US dollar is going to struggle moving forward. So when you're looking at something like the Aussie dollar CAD, now that we've done that retracement, so there's the pause in tariffs, I don't think there's any reason why we shouldn't just continue to do that. However, if the oil price continues to drop, it's going to make the Canadian dollar difficult to power up, which means that move is harder. So we're reliant on commodities dropping. So difficult. But I don't see any reason why we shouldn't come and retest this area here. But obviously we've got this area to retest here. So one or two things is happening. We are either going to reject these lows, which is what you're seeing playing out now, and then off we go to the downside, or we're going to come up and test this range again and hold back up in this range because there's no interest in weakening commodities. So, but how can you tell? Tomorrow, Europeans are going to announce new tariffs. Those tariffs are going to get retaliated against by America. America's deals with Australia and Canada are going to shift as a result. Everything's too fluid to give any sort of directional bias, but go with what you see on the chart. You know, look at that double top M pattern reversal. If that low breaks, you know, assume you're going to break down into these propulsion gaps. Yeah. This is what the propulsion gaps tell you. The propulsion gaps tell you where the market is going. Yeah. These are directional indicators. So these are where the large bank orders are, where the inefficiencies are in the market. Market doesn't like inefficiencies, it fixes them. Yeah, this is why propulsion gaps get filled. So I haven't got many on here. A bit further. Yeah. So, I mean, at the moment, it's a little bit difficult, isn't it? But, you know, everything in grey you see is a fill propulsion gap. Propulsion gaps basically are targets for the market. So any inefficiency and large bank orders in the market will get added to when they are retracted to or run over. But either way, the market always wants to trade back there. The problem you have with a lot of instruments at the moment is that there is propulsion in every direction. So it's a directionless market. It doesn't know where to go. It hasn't got any direction. So everything you see at the minute, you're always going to have multiple options. We talked about this in the member stream this morning. The worst possible place to take a trade from is in the middle of a range, because you're giving yourself a 50-50 shot up or down. At least if you take a trade from the highs, wherever those highs may be, yeah, the likelihood is that the sellers that caused the drop are going to help your trade work out. If you take a trade from here, you've got the buyers or the sellers helping your trade work out. So it's a 50-50 shot. It's always a 50-50 shot, but it's more of a 50-50 shot if you're trading from the middle of nowhere. If you're trading from extremes, you've got much more probability of the opposite direction happening. One, you've got buyers you know for a fact are sitting at this level buying up. Two, you've got large bank orders, which when they're filled, will likely get added to. From here, it could either go there or there. And one of those two things with 100% certainty is going to happen. It will either fill that or that, guaranteed. You can't sit there forever doing that. It will go there or it will go there. Your job is to decide which one. So trading from the middle, not the best thing to do, is it? So things like this, quite hard to trade at the moment. After the strong bearish momentum at the Asian session today, do you think we will see gold at 3,000? No idea. What's that? How could you possibly predict that? I don't know. Where are you seeing bearish movement? I see a complete range. If anything, what I'm seeing is a bullish wedge. Me, that's contracting to the upside. That two big red candles, that's spread. It's got nothing to do with price. That's the New Zealand dollar. That's the New Zealand dollar unemployment this morning. That's what caused that. Nothing to do with Asian session or anything. It's just price action caused by news. Yeah, so right now, yeah, short it right now. There's a 3-bar reversal going in at the London high. Getting short, or as I said, wait for it to come down to a trend line which you can draw in and buy it. I don't know. You're asking me to predict the future, and I have not got a crystal ball. Sorry, bear with me. My broker, always my broker. A broker, there's always a broker phoning. Right, it's going nowhere today, is it? So we are stuck. I don't think we're going to get any movement today. I'm long Nasdaq as well. I'm just going to close this Dow off. I'm not going to trade the Dow as well. There's no point in getting into all three indices today. So I'm going to just get rid of the Dow trades in case we whipsaw. If we're going to sit around and do this all day long, we're not going to get any direction. We're not going to get any movement to any targets. So S&P is struggling to make ground at the moment. We are right in this propulsion gap here at the moment, which they've sold twice. We've got some rejection at the minute in this. So the market is finding it hard to get through this propulsion gap here. So I just don't want to get whipsawed on all three instruments today. So I'm just going to stay on the Nasdaq and the Dow and hope that we get enough movement just to get most of that loss back. Load of rubbish. Euro US dollar. Sideways, dead. I mean, what can you do with that? I mean, it's just dead in the water, isn't it? It's just not going anywhere. So that's last week's high and low. I mean, it's just not going anywhere. We are stuck. Stuck. FOMC this evening will move that up or down. Trade tariff retaliation from the Europe tomorrow will move that up and down. I've no idea where anything's going at the moment because it depends what Trump has said to Powell he's got to do this evening if he wants to keep his job. And it depends what the Europeans are going to come back with in retaliation to Trump. And then it's going to depend what Trump does in retaliation to what the Europeans do tomorrow. And this is the main instrument between Europe and the US. So it's going to go one way or the other, isn't it? But where? No idea. The market seems at the moment to be reacting positively to the announcement that they are going to be placing tariffs. But marginally. Yeah, I mean, it's not, that's because of the New Zealand dollar. And that's because of the New Zealand dollar. So, but you can see, we've got a slight positive reaction at the moment to what we've seen. But I don't think Euro US dollar you can really do an awful lot with at the moment. It's holding in the range. This is exactly what I've just been speaking about. So this range, you can see by the black lines on the chart, that is your range at the moment. So that's your 3-week high, and also last week's high and low as well, which happens to be exactly the same as the 3-week high and low, which should tell you something. We're not going anywhere. We've attempted to break out the high. We lasted 48 hours. News, fake. And now we're just sitting around. So where you are right now at this exact moment is pretty much bang in the middle, 50-50 of the range that we've been in for the last 3 weeks. Just nothing to do with it. Ignore it. You can't trade that. You can flip a coin. You're either going to go there or there. But there's no signal to do anything. There's nothing you can read in that says I need to be buying or selling this at the moment. I need to be sitting on my hands doing nothing with it. But there is more downside momentum available than upside. But again, it depends what happens tomorrow and this evening. Yeah. For example, if Powell this evening drops interest rates, this thing's going to be back up here, 300 ADR in hours. If Powell says interest rates are staying the same, which is forecast, and then he comes out and says Trump's decided he wants tariffs to be continuing, therefore we are not going to do what he says, drop interest rates. In fact, it's more likely that interest rates are going to rise. We'll be down here. If he comes out and says there's a lot of uncertainty in the market, will be data driven, that's what you're going to get. And then tomorrow, the Europeans are going to announce something. Intraday, these are the types of these types of markets that we're in at the moment are the ones where the lucky get rich. So you can press a button with a 50-50 probability right now. If you put a half an ADR stop loss on a trade, if it goes your direction first, you'll make money on it. If it doesn't, you won't. And that's literally all you've got at the moment, because there's nothing fundamentally driving these at the moment. So it's a case of just sitting around and waiting. I would be interested in shorting these highs, and I'd be interested in buying these lows. But unless it gets to one of those, I'm not really interested in doing anything. The problem is when it does get to one of those, it's going to get to it on news more likely, which means that you're not going to get an opportunity to trade it. Because if it suddenly spikes up on FOMC this evening, you don't really want to necessarily sell that, because it might be a strong move in that direction because of something said in FOMC. So it's kind of the week to sit on your hands and wait, FOMC week. Unless there is something specifically said that is definitely going to be continuously bearish or bullish. But I can't see Powell coming out and saying anything, unfortunately. He's under the cosh. Look at this price action. The size of these wicks, look. It's Mr. Whipsaw today. John Wick is in the building. Jittery, I would class that as. This Euro CAD, I've not got enough profit to take on this. We can't get out these highs since I took it. I bought it all the way back down here, look. And since I've been in it for the last 3 days, I'm literally just accumulating swap costs. So I've got a stop on it. I mean, it's not massively expensive swaps, but I've put a stop loss on it this morning because if it is going to just come down and just stay like this, I just don't want to be in it anymore. There's no point in sitting in it, accumulating costs. So it's either going to go and it's going to hit target, and target for me is 1 ADR, which is 100. So yeah, that is target basically. So if we come up and test that propulsion gap, either this evening or at some point tomorrow, I'll get out. But other than that, it's one of those trades. It's either a break even or it's a target. But haven't got anything else on really. Oh, this is going to be one of those days. It's just whipsaw. So this is where you want to be on the 1 minute time frame. So you just want to be basically buying the 15-minute range low and range high, and just keep buying every wick. Play pinball, ping pong, whatever you want to call it. Chop, 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 chop. Oh, absolutely awful. US dollar CAD. Sorry, Euro US dollar. No, US dollar CAD. I am going mad today. It's the glasses. It's driving me mad. Same thing. So Euro US dollar CAD. We've got the same situation at the moment. We've got a stalemate in tariffs. This is why tariffs don't work. We've got a stalemate. So basically, you put tariffs on, I put tariffs on. You put tariffs on, I put tariffs on. Who wins? Nobody. What happens when there's no power in either direction? We go sideways. That's exactly what you're going to get with this until something changes with one of these two. And at the moment, it isn't. If you look at the downside on it, you've got roughly 4 or 5 ADR of movement to the downside before we get to this previous low from back in September last year. Other than that, you've got the range low, which was lovely support. We broke down through it, failed, turned into resistance and blew straight through. So there or there to the downside, but big propulsion gap fills to the upside on the cards as well. But, you know, you need some power in this US dollar and you're not going to get it. I think there is some coming at some point soon, but I'm not convinced because I don't know whether he's going to come out and say something negative again. But at the minute, really not a lot you can do with it. So it's basing at the lows. If I was buying it, I'd be looking at getting out in these propulsion gaps. So that there is your previous support. Try to break through it, turned into support again, slammed it. So when we retest this, I suspect we'll probably sell that propulsion gap because we made a new low. So you've got high, low, lower high, lower low. That would be my lower high, the upside. So you're retesting this area here, and that's the propulsion move that caused that break. So long it up into there. That's 4 ADR. So it's either 4 ADR roughly upside or downside. But, you know, don't expect to get either of those moves played out within 1 or 2 weeks at the minute because it's just going nowhere. You're stuck. You know, it's just, you know, this is the market we're in, unfortunately. All the good stuff's just not moving. So if you know, the trend line junkies will be loving this type of price action because, yeah, you get up to there and you sell it. If you stick a moving average on this, stick a 20 MA on this, it's beautiful. 50 probably. What time? I'm on an hourly. Yeah, so 50. sell retracements, basically. I mean, even 50 is not good, is it, in this case, really? It needs to be a bit more movement, but I don't know. Difficult at the minute. But anything, I was always taught, and it's always stuck in my mind, if in doubt, stay out. Yeah. So if you look at a chart, the way my mentor used to go through it with me every day was we'd flick through the pairs exactly the same as I do. And we go, right, what do you see there? Nothing. Brilliant. Move on. What do you see there? Nothing. Move on. What do you see there? It's trending upwards. Okay. So let's look for a pullback and basically see if that continues. Yeah. Okay. So there's a plan. But if it looks a mess and you can't see anything obvious, just leave it alone. Euro, US dollar, and US dollar CAD are prime examples of it's just a mess. It's just doing nothing. So if it does nothing, you can't trade it, because the only thing you need as a trader to make money is movement. If something does not move, you cannot profit. If something moves like this all the time, you're likely to get stopped out if you're using stop losses. If you're position trading and you're trying to get from A to B, being a measurement of average daily range, you're not going to get there. So it doesn't work for position trading. It doesn't work for intraday trading. It doesn't work for anything, does it? So just leave it. Yeah. So if when you're flicking through charts, if you see something that looks good, looks obvious, like a nice structure, you can trade that. It's moving. But all of that stuff, this is a range. So, that you can still trade this. This CAD Swiss is still absolutely tradable, but the only place you can trade it from is there or here. Yeah. So these lows and that low, these highs and that high. So if you're here, there's nothing to do. If it gets to here, set an alarm. If it gets to there, set an alarm. If it gets to there, set an alarm. So that's ADR. And this is why ADR is such a good thing. When you use the ADR dashboard, every time you get an ADR alert on here, it makes you look at your chart. If you look at your chart and we've hit ADR to the downside and it also coincides with a 2-day low, get ready to get in. It just makes you look at the chart. If you look at an ADR and it's in the middle of nowhere, probably not going to do a lot, is it? So, but yeah, it's a lot of the market is like this at the moment. But yeah, buying the highs, buying the lows, selling the highs. Can't go too far wrong at the moment. Daily highs and lows as well at the moment. That's yesterday's high. That's the previous day's high. Yesterday's high. Beautiful wick rejection. Inside bar. We've got 30 minutes left on this candle. If the bears start winning this one out again, that's a yesterday's high rejection. Sell that intraday. But don't expect to, flush. Just try and grab half an ADR. Small movement. Really all you're going to get at the minute until all these trade wars are sorted out, because you're just going to get violent move followed by technical term. Yeah. Okay, broken out the long. So we are attempting a long. So this is the propulsion gap at the moment that we're currently trading. Why am I drawing these in? Blimey. Oh, we're sitting inside one massive propulsion gap. Look, so this is the. Yeah, it doesn't work today, does it? So yeah, we're sitting in one massive propulsion gap at the moment, but obviously this is the downside propulsion gap that we're currently testing. So I'd be wary when we filled that to the upside. Both the same. I mean, it's exactly the same chart, isn't it? So if we do break above there, we're going to test the highs, which is where my partial is. So see if we can get up there today. Dow has still not broken. So if you did leave those pendings in place on the Dow, you're still not taking a trade. Look, definitely more bull price action. But I mean, we're just not getting anywhere, are we? Right. That's all I've got for today. There's not a lot else to discuss, really. So be aware, obviously, of FOMC this evening. So that's 7 o'clock. Sorry, 7:30. Sorry, 7 o'clock for FOMC, then 7:30 for the press conference. So that's where you're going to get your movement, unless that comes out at 4.25. If that comes out, I mean, it's not going to come out at 4.75. Well, I'll be very surprised. I think he'd probably be dragged out kicking and screaming by Trump if you put it up to 4.75. But anyway, there is a possibility of 4.25, as small as it is. You just don't know what's going to happen. But if that comes out at 4.25, obviously there's going to be a massive shock and we're going to see huge movement everywhere. But if it comes out at 4.5, which is kind of 95% sure it will, that's where you're going to find your movement when Powell explains what is going on. So somewhere around about the 8 to 8:15 mark is typically where we tend to get the move. So the press conference, when the questions are finished, the market analysts will move in and go, right, either we have a direction or we don't. If we do, we will move. If we don't, we will just sit around and do nothing. So just bear that in mind. If you've got any US dollar exposure on, in fact, if you've got any exposure on really in anything that's in profit, it's worth taking it, because one or two things is going to happen on my Euro CAD, for example, when because it's a Canadian cross, if that dollar suddenly massively spikes, the Canadian will spike with it. Well, it used to. Whether it will anymore, I don't know, because of obviously they're not friends anymore. But normally you would see the same move. So you're either going to lose it or it's going to hit target. So if you're worried either way and you want it in the bank, take it off before FOMC, because you can't get it back if it goes against you. If it goes your way, yes, you could have made more money, but all depends how your day, your week, your month is going. If you're doing well and you're happy to keep it on, keep it on. I've just protected this with a break even, so I'm not happy to take any risk long term on it, but I'm just going to leave it as it is at the moment. I've done a little bit of bank today, so not the end of the world. So, but just be aware, obviously, that is coming up this evening. And then tomorrow, I'm not here, back on Friday morning at 8 o'clock. But tomorrow, obviously, we've got the pound announcement. So that is forecast to drop. So we'll see what happens there. But there's a lot of movement potentially coming up over the next 24 hours. I'm really toying with the idea of just shutting these today. I'm just calling it quits because just made my decision for me. It's gone into drawdown. I cannot remember if you used the reversal alerts on the indices. Did you try in the past? Yeah, no, there's nothing wrong with using reversal alert indicator. Is just a signal indicator, so it works on everything. So you can use the reversal alert indicator on any instrument, any index. Yeah, there's a reversal alert there. Drop down 15 minutes. If I had proper data, which I haven't. You're not going to get a reversal alert on that one, are you? Let's look at the Dow. So there you go. You got one on Dow there. So there's nothing wrong with the reversal alert indicator. It's going to signal reversals. But I don't position trade the indices because the indices are long only normally. So you would normally buy indices, but obviously, times like this, yeah. So Aussie Swiss 125 ADR. So we've still got Swiss franc movement coming in. So yeah, you can use it. All an indicator does is it tells you what's just happened. Yeah. So all indicators lag price. So it doesn't matter what indicator you're using, whether you're using the market reverse alerts, RSI, ADR, CCI, MACD, whatever you want. They tell you what has happened. So the market reverse alerts indicator here, for example, is telling us that price pushed higher than it had previously. We know that. You can see it on the chart. And this reversal alert here is telling you that price has dropped. We know that. You can see it on the chart. So all indicators do is signal movement. Euro, Swiss, ADR, Swiss francs on the run at the moment. So Swissies buying up again. Euro, Swiss coming down. All these Swissies will be coming down. Aussie dollar, Swiss down. 125 ADR there now. So there we go. Watch this low. That is previous day's low. That's Monday's low. That is yesterday's low. Look how well that's holding. Yeah, we're exhausted. 125% of its average daily range. We're just about to hit all these buyers. So watch this area for price action. Okay, so the prime example, M5. Yeah. When that reversal alert signals here, it's telling you that the buyers, sorry, my phone's so busy today. The buyers sitting at that level have taken control of the market. Yeah. So when that reversal happens, it's signaling that the buyers are stepping back in. So you can use it on any time frame you like, on any instrument you like. All it's doing is it's telling you who's in control of the market. Price action will always tell you first, and indicators will tell you second. But indicators can signal. So that's what it's for. But yeah, no problem using it on indices. I like the ORB test you did on the Euro US dollar the other day. Did I do a Euro US dollar? Euro or ORB test? Pound yen I did a test on the other day. Can't remember. Don't forget, in every indicator under the sun is telling you what's happened in the past. Yeah, this is why moving averages are the most useless indicator on the planet, right? So a moving average, a 200 moving average, what you're asking your chart to tell you is, could you let me know what the average price was for the last 200 candlesticks? How is that going to help you in any way, shape or form predict the future? Yeah, I don't care what happened 200 candlesticks ago. It's gone. Nothing to do with it. Moving average crosses, absolutely useless. By the time you see a moving average cross on your chart, yeah, price will have already gone. You will have missed it. That's where it reverted. You get in down here because the moving averages have crossed. You've missed the move. This is why, it takes a while for traders to understand what indicators are telling them. It took me ages. I was chasing golden crosses and all sorts of moving average cross signals and strategies for years because everybody told me the trend is your friend. So I believed everybody. And I was like, oh, so I've got to trade in line with the trend. Otherwise, I won't make any money. Never trade in line with the trend in my life. I do. I don't now, but I have done in the past. But so I was following all these moving average crosses. And it takes you such a long time to realize. And the thing that really drives it home for you is every time you take a trade, as soon as you press the button, it goes the opposite direction. And it did that so many times, I started looking into why. And I realized that when that cross happens and it signals you to go long, it's going to pull back. If you're right and the trend is going to continue, you're getting in just as it's about to do the pullback. So that's when I started going Elliott Wave Fibonacci, because I was like, well, okay. So if it's gone that way, I need to figure out where it's going to draw back to, and then I will take the trade from here. And I will try to get out at that high or maybe a bit higher. And then I suddenly realized that, but if it's moved that high and I know it's coming down, why don't I just short it? That's when I started looking into mean reversion. And I was like, well, this is what it does 90% of the time. It just goes up and down. So basically, after it's gone up, I'll go down. And after it's gone down, I'll go up. Forget the trend. It's got nothing to do with anything. If something's trending like this beautifully, and then somebody makes an announcement, for example, let's say we're going to use tariffs. That trend has got absolutely nothing to do with the future direction of movement. The fact that we're collapsing now does not mean that we're going to fly up or down for the next 10, 15, 20 days. The direction we're going to move from here will be decided by one thing and one thing only. A guy with orange hair deciding how he's going to destroy the planet's economy. It's got nothing to do with an orange or a red line or a blue line or a shadow on your chart. That does not predict the future. Nothing does. All it does is it tells you what's happened in the past. So when that moving average cross happened there, you missed all of that move. Yeah. It just doesn't work. But that is true of all indicators. Yeah. That signal to go long here, this is where the price shifted all the way back there. So what you do is you realize you've missed the move and you can try and get in on the second leg of the move. So signals from indicators tell you what has just happened, which sets you up for the next thing that potentially could happen, which is always going to be a 50-50 shot. So you've got to have a system or a strategy. But going in line with direction price has just gone is better than not. This is stalling out. Every time I say it's stalling out, it pops. So the only thing that's giving me confidence at the moment is these wicks to the downside. So obviously we are in a very buyer-heavy market, but there's no sellers to absorb these orders, so we're not getting any progress. So I think I'm going to call it a day. If I shut this, it's going to fly, innit? Okay. I'm closing the NASDAQ and I'm cancelling the pending. I don't want to be caught by a strong downward movement. Because I've closed that, now it's going to rally. So I'm going to keep the S&P open for a little bit longer. Honestly, I just can't be bothered. Sit and watch this afternoon. I've got other things to do. So calling it there. So I'm out and flat. So it's break-even day. I don't want to trade this rubbish. This could easily just go bang or bang at a moment's notice. There's no price action. There's no strength of buyers. There's no strength of sellers. There's just nothing today. So I think we've been lucky to get a break even out of this today. So I'm just going to call it a day there and try again tomorrow. It's just not worth playing with it, in my opinion, today. So I couldn't remember properly. It was a good test. Yeah. So the pound yen, we made some money, didn't we, with it? I'll have to go and look at that video again. I can't remember. But yeah, opening range breakout on the pound yen. I can't even remember what the settings were, but yeah. OLB will work on any time frame, especially version 3.1, because you can specify the times and it's basically a number of bars. So you can literally trade any time frame you want and any range you want at any time of day. So you can set up to do whatever you want now. It's so much more versatile, this version, than the previous version, because you're not limited to time frame. Because I know a lot of people are trading 1 minute charts on indices as well. Look at this thing. It's just dead. Do something else today. It's an absolutely typical FOMC day. So just not worth bothering with. Right. There we go. So that's me done for today. I'll be back on Friday morning at 8 o'clock. We'll have a look at the rest of the week. Yeah, and then I'll be back on Friday afternoon. You are showing us MT $ correct, not MT percentage. How many times have I typed that? MT4. Yeah, this is MT4. I don't use MT5. I use MT4. But I mean, use whichever you want. I just prefer MT4. It's all the same. Price is price. Doesn't matter what software you use to show you the candlesticks. Price is price. Doesn't matter. Use whichever one you like. I just prefer MT4 because I find it faster and more reliable. But yeah, either or, up to you. Right, so that's it. I will see you on Friday morning, same time. Good luck with FOMC this evening if you're going to do anything with it. And obviously bear in mind if you've got any pound exposure tomorrow, potential big movements on the pound coming. But we've got Bailey speaking Friday morning. So Friday morning, we will go through the week, recap of the week as usual. We'll have a look at everything that's happened in FOMC and there. I will probably post in Discord anyway if I see anything of any interest out of that. But as I say, I'm not really expecting it. All right, so have a good day. Anything you need, let me know in Telegram or Discord. I'll be back on Friday morning. See you then.